The ORB trade, or the opening range breakout trade, has always been one of my favorites just personally to trade and to teach to new traders because it's super simple. It has a really systematic approach and it forces you to really wait out that initial rush and chaos before you really get an entry. Plus, we're kind of taking advantage of a play that helps kind of set the tone for the day. So it can kind of help you set up in a few different ways. But I've also seen a lot of absolute BS out there about orb trades. It's like everyone wanted to hop on the trade and get their keywords so they would pop up in your searches, but no one actually sat here and did all the homework. So I'm going to tell you exactly what my orb trade rules are and how I came up with them, because you might even be able to improve on this. But let's start at the beginning. What is the opening range breakout, just to make sure that we're all on the same page? And this is a 15-minute Nasdaq chart right now. So what we're looking at for an opening range, we have the pre-market price action on the left and the New York session on the right. And the opening range is just going to be some range that we defined that starts when the market opens and goes for a certain period of time. So I used to trade a 30-minute orb a lot, and I guess I've personally had some patience issues with it. I've really been playing with the 15-minute orb. There's also people who will trade a 5-minute. You can really make this strategy your own. But what I'm going to focus on today is the 15-minute orb strategy. So what we're doing on a 15-minute chart is just looking at the first 15-minute candle, because that's going to define the 15-minute opening range. This is the range of the first 15 minutes, the high and the low of that 15-minute candle. If you're looking at it on a 5-minute chart, it's going to be the first 3 minutes. If you're looking on a 1-minute chart, it's going to be the first 15 minutes. It's another reason I like watching a 5-minute chart at open. It's a little bit easier to keep track of. But all that we're doing is seeing if that range is going to break in the most simple terms. The problem is, a lot of people will say it works really great or it doesn't work at all, and that's based on the rules that you set when you actually execute the trade. And that's what you really have to figure out when you're coming up with a trade strategy. That's what developing a trade strategy is. So that's exactly what I'm going to show you here. So if I want to look at the 15-minute range, I need to backtest it. And there's not really a way that I can just throw this in a backtester and have it really understand all the different things, because I have to give it a target, I have to give it a stop loss, I have to give it all these things, and I have to define that off of something. So the first thing I want to do is just literally go back and look at all the different charts and kind of find some baseline for all of that. And I started off with just this little box, but I got a little frustrated because I was trying to look at multiple assets, and this was just a lot. So I ended up creating this little tool, and I just call it the ORB Wrangler. It's available on my website, but it's so simple, you don't actually need it. So what this does is this just goes ahead and fills out that first opening range for me, and then it's automatically taking some calculations for me. And that way I can go back and look at the charts and kind of see what those little nuances that I want to optimize might be. So I have a midpoint line. This is the middle of the opening range, literally. And then I did 3 lines that are just multiples of that middle line. So this one's going to be halfway. The first line is halfway through the opening range. And the second one's going to be a full duplicate of that opening range, a 1-to-1 basically. And then I have the same thing on the downside too. Just for letting you know, this little line here, this dotted line, is my VWAP. I have it anchored to the session. This is just a personal preference. You can use an EMA, you can use the regular full session VWAP. I just like this one that starts at the New York open session because it reacts a little stronger. And one of the things that I like to watch is the angle of this line. So if VWAP's really flat, that's showing that price is slowing down a lot. If it has a slope or a decent angle to it, that's showing me that there's a lot going on. And of course at open, it's going to be really, really, really reactive. That's just why I prefer that one. We're going to kind of shelf that for a second and come back to that later. But if I want to go back test this and I can't run it through a back tester yet, the first thing I do is just literally go back and look at all the days and take some notes. So, the first thing I'll do is I have this on the extended trading hours. I'm going to hop down to just the regular trading hours because in this case, I'm interested in the New York opening session. One of the cool things about the opening range breakout trade is you can anchor it to other opening sessions like the Asian session or the London session. or something like that, depending on what asset you're trading. But I really want to get this big, powerful breakout out of the New York session when we're most likely to break out. So I am literally just going to look at these, and making this tool just made my life easier, but I could have sat here and calculated this each and every day. I'm going to take the volume off just so we can really focus on what's going on in each of these days. But this is what I did. I just sat here and I took notes, and I actually even have it on paper and everything, where I took notes on each one of these days, and I took note of how often we broke out of the opening range, and then when we broke out, which targets we were hitting. So basically, I wanted to find the likeliness of how often, if we break out of one side or the other, these are all bullish break, or there's a lower break, but if we break out of that, how often are we hitting the first line? How often are we hitting the second line? And I literally just went through as many days as I could stand, and I made those notes. And that's what I have on my papers on my desk here. And I did this on ES first, because ES is usually my favorite child. But what I noticed, and this makes a ton of sense, is that I was actually getting more size on the breaks, actually hitting these advanced targets on the Nasdaq more often than I did on ES. So this was kind of the first optimization I did before I even got into the nerdy stuff. So I immediately just switched over to the Nasdaq to watch this trade. One of the big questions I get all the time is, how can you have confidence in your trades? And I'll tell y'all, it's a lot harder when I'm trading things live and I've got people asking me questions about every little thing I've thought of and every little thing I never would have even considered. And I've got people second guessing me in all this stuff. Even in the hardest situation like that, if I have the data that tells me how often a trade wins and loses based on these certain sets of rules, it doesn't really matter how much noise is out there, whether it's in my own head or in a chat or when I'm trading live, all of that craziness. So that's what I'm looking for here, is just the numbers. How often does this work? How often can I rely on it? So I will give you a little sneak peek. The rules that I'm about to tell you, and I have the stats here, they work out. Okay, well, we lost. I'll tell you how many times this trade hits the stop loss. 22% of the time. 22% of the time we lose on this trade. Another 23% of the time it's hitting a trailing stop. And then 55% of the time, so more than half the time, it's hitting the main target that I'm going for. So let's get into that. Okay, so here is a Nasdaq 5-minute chart, and this is usually what I'm trading off of in the morning, and I'm going to explain the rules to you in the context of the trade that actually happened this morning, and I did take this trade live, so you can go look for my recap on it if you'd like. But we have the open is going to be over here in the black, and then the pre-market is over here in the blue. So I'll go ahead and let the first candle form. And this is a 5-minute chart, so I'm waiting for the first 3 candles. So no matter what, I'm not taking this orb trade before those first 3 candles are formed. So my little tool just has the little dotted lines until we're actually inside of that opening range. So for the first 3 candles, I just literally sit and watch. I can do whatever I want. As long as I still have those dotted lines, or I'm counting the candles, however I want to do it, I know that I'm still inside of that range. And since my trade is a break of the range, that's what I'm waiting for. Once that range is defined, and that's these first 3 candles here, then I have the actual levels. So my tool is drawing a solid level here. If this was back old school, the way I was doing this, a couple weeks ago, I would just draw a box on these first 3 candles like that. That's my opening range. And then I can extend it out. Since I have my little tool, I'm just going to look at that. So what I can do here is just literally place some orders. So I can place a buy order right here. It'll be just a hair outside of that level. I might bring it down just a smidge here. Y'all know it's hard to get TradingView to go exactly where you want it to. And then I can do another one down here, just outside of that range. And then all I have to do is sit here and be patient and wait. Because then once the market, see, that one didn't actually hit. It got really close. Okay, so here's the first rule. We don't front run the opening range. We leave our orders there and we wait. We do not say, oh, that looks really bullish, I should go in. We literally sit here and wait. The other thing that I'm looking at is my VWAP, and it's kind of hard to see right here because I don't have it on. Okay, there it is. So the other thing that I want to look at is I want to make sure that the VWAP's not flat. So I do have some slope on it there. First it was sloping down. So yeah, maybe we would have been looking for the opening range to break lower. But hey, now we're kind of looking for it to break higher. And that's one of the things that happens during the open is we get a lot of this whipsaw back and forth, and just having the discipline to wait for those candles to form really keeps you out of a lot of the nonsense. And so now I have a system that I can use to trade this. So now I'm literally just waiting for myself to get tagged in. So that is where I get tagged in on this trade at 21,285.5. So I did actually take this trade. I can throw a screenshot up so you can see how this actually works once we go through it. But once I'm in, I just sit here and relax. So the stop loss is now going to be, let me get this line here. This is going to be the stop loss. I'll make that one red so we know that's stop loss. And here's our entry. Make that one yellow. We got our yellow entry. And now we need a target. So we'll make a third up here. That'll be the target. And again, this is my don't be a dick for a tick rules. I always just go just inside of that line because I've had price come up to me enough and say, nah, not today, and turn around without me. And I don't play that game anymore. So here is our target. So let's talk about it. We have our entry. We already talked about that. My stop loss, the initial stop loss is going to be, it'll actually be just on the other side of this there. Just on the other side, a couple ticks on the other side of that opening range. So just below the low of the opening range. Our entry was just above, we're tagged in. And the target is, I mean, this isn't technically a 1-to-1, it's basically a 1-to-1. I'm basically targeting a 1-to-1, just a couple ticks below the 1-to-1. The actual 1-to-1 hits a lot. This is my personal comfort level here where I just have it a couple ticks below. So then I can just sit here and wait. Okay, so here's the next rule. When price hits the first line, and so this is half the distance of the opening range, that's when I'm going to move my stop loss. So my stop loss is way down here. Now I'm going to move it to just above entry. I want to get basically, if I get stopped out here, I want to cover my commissions. So I'm just doing a little commissions cover stop move up there. The target is still up here. So I'm just showing you this on a 1-to-1 right now. This is 1-to-1 money management, basic orb. We'll get more advanced later. And then it's just a matter of sitting and waiting. In this case, I did start trailing when I saw that doji. And this isn't actually part of the rules. This is more of a comfort thing. If I was algo trading this, the algo wouldn't have done this. But what I did is I just moved it up just a little bit. So I was under that swing high when I saw that doji, just so I can make sure I got a little something on the day. And then it's just a matter of waiting. And there it got tagged out there. So if I trade this every single day, I will lose some of the time. Didn't lose today. Didn't lose Friday. It did lose at some point last week. It will lose sometimes. With the back testing that I've gone over this year, I haven't gone in like super back into previous years, but for, Trump era, tariff era, wild and crazy Nasdaq, the results that I'm getting is I am going to get break even or better 78% of the time. But that does mean that 22% of the time it's not going to work out. So what I do is I make sure if this has a horrible week, if it gets 4 failures in a week, how much can my account withstand? And that's how I figure out my position size for the different accounts. Okay, let's recap those rules, and I'm going to make this really crazy and even take price off of here. So first of all, I'm using an asset that is prone to break out. So the Nasdaq is known to be really powerful. And then what I'm doing is I'm just defining that opening range. For me, it's 15 minutes. So on a 5-minute chart, it's going to be the first 3 candles. If I was watching a 15-minute chart, it would just be the first 1 candle. And then I want to make sure that VWAP is not flat and it has a decent angle towards the breakout. As long as we're not just really, VWAP would be flat if we're hanging around the midpoint. So I'm really looking to see if we're above or below and, getting some distance away from the other side. So once we get that and we get a breakout, a lot of times you'll notice we have volume with it. If you have volume on the break candle, That's a really, really good confirmation. That's going to make this an A trade instead of a B trade. So once we get a break, especially with volume, we're already going to be in because we had our order up here and another order down here. So one way or another, we're getting in. Once we get tagged in here, we replace that order down here with a stop. So this was an order to get tagged into the trade. We're going to cancel that order, and then we're going to put our stop there. Once price hits the first line, which is half of the distance of the opening range, the stop trails to break even. And then we wait to make sure our trade hits at the target up there. Super simple. I do have some other rules that I've kind of watched, just going over all of these trades over and over and over again, because sometimes we'll get multiple breaks. And what I'll do on days that we have multiple breaks is I will play each direction up to 2 times. I do want this to happen in the morning. I'm not looking at the opening range in the afternoon. You could, that would be a whole different trade. But right now I'm looking to get in the morning, and only the first 2 times it'll break a level, because it will break a level, come back, retest, and then go. And in that case, I want to be in. And what I found was the happy medium was letting myself take that each trade 2 times. Sometimes this trade works out really, really quickly and you'll get your profit in just a few minutes. I have had some times, and Friday was a case of this, where it really takes all day of grinding and grinding and grinding to actually hit those targets. So that's why I like to have something in there already where I can get my stop protected and just let the trade work out no matter what I'm doing that day, so I don't have to sit there and monitor the charts. That's why I always like to have that trailing stop built into my strategies. My next steps are going to be optimizing this trade even further and working on some automations out of it. So watch the Discord and be sure to subscribe for information on that. And definitely come watch me in the morning on My Funded TV and we can trade this together. Let me know if you're a fan of the opening range breakout, either now or before you came to this video, and how you like to trade it, if you have any special little rules that you find really successful. All right, that's it for today, but there'll be a lot more where that came from, so I will see you real soon. Love you. Bye.